Hello, welcome to the European Open briefing for Friday, August the 11th. I'm Rafi Bajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we still have quite a bit of risk off this morning. We're seeing more war words being exchanged between North Korea and the United States. Therefore, this is holding up demand for safe havens such as gold and the yen, and to a lesser extent the Swiss franc. The dollar is under pressure against the yen. It briefly fell below the 109 level while gold prices hit a 2-month high. Other currencies, the euro and the pound, are relatively steady, although risk-sensitive currencies such as the Aussie and the Kiwi are extending their losses against the Greenback. And even oil prices have reversed lower following more falls in global stock markets. But let's start now with what's happening with North Korea and the United States. Yesterday, President Trump followed up on his previous comments of unleashing fire and fury, saying that these comments were not tough enough. He also said North Korea should be very, very nervous. Although the US Defense Secretary attempted to tone down the rhetoric, he did say that America is pushing for diplomatic effort. And here in the chart, we can see the global volatility index. In the daily chart, we can see volatility has risen to the highest since May. That's when we were having those uncertainty in the White House. And on the daily chart, we can see that in the hourly chart, we can see global volatility index has been steadily rising over the past 3 days. Looking at gold prices, although we are seeing some easing of those recent gains, oil prices did manage to make a fresh high earlier today of $1,288.92 an ounce. The yen and the Swiss franc are also mostly up against other currencies. Swiss franc hasn't been making as strong gains over the past day as the yen, due to wariness in the markets that the Swiss National Bank might intervene if the franc goes up too quickly or by too much. And global stocks have also been hit by this latest bout of anxiety. Yesterday, the Dow Jones, S&P, and the Nasdaq all fell sharply, recording their biggest daily drop since May. And Asian and European stocks are also in negative territory. Looking at the dollar now, we can see dollar yen. The dollar yen had paused its decline late on Wednesday, but has since resumed its downtrend, dropping to a fresh 2-month low, 108.88. It has rebounded back above the 109 level ahead of the European Open. Dollar index, though, hasn't seen too dramatic falls. It's been relatively flat over the past week due to other currencies within the index falling against the US counterpart. Yesterday we had weaker than expected US producer prices. This further dented the expectations of a third Fed rate hike later this year. We've got more important data today in terms of the US CPI numbers for July. And yesterday we also had comments by the New York Fed President William Dudley, who said that even though the weaker dollar and a declining unemployment should help push up inflation, it's not expected that inflation will rise all the way back up to 2%, at least not within the next 6 to 10 months. Moving on to the euro and the pound, we can see that against the dollar, they have been relatively steady over the past few days, despite the risk off that we're seeing in financial markets. Although both currencies are sharply down against the yen, the euro is at a 1-month low, 120.16 against the yen, while the pound hit a 6.5 week low of 141.37. Yesterday we did have some UK industrial output data which beat expectations. That did help the pound. It did briefly rise above the 1.30 level, though it has since dropped back to just below the 1.30 level. It's going to be an important week for the UK next week, as we've got UK inflation, unemployment, and retail sales numbers, which will all be watched very closely. Moving now on to the Australian and New Zealand dollars, because both currencies are continuing their decline against the US dollar. The Aussie is at 3.5-week low of 0.7836, and the Kiwi is at 4-week low of 0.7249. We had the RBA Governor Philip Lowe speaking earlier today. He said that the rate hike is quite some time away, and he was also asked about whether or not the RBA would intervene in the currency markets to prevent further appreciation of the Aussie. And Philip Lowe said the RBA does have tools in place, but it would only do so in an extreme scenario. This follows similar comments by the RBNZ Governor Graham Wheeler yesterday following the RBNZ policy meeting, who said that the central bank would intervene if necessary if we do see sharp appreciations of the Kiwi, although the Kiwi has been struggling more than the Aussie in recent weeks. Quick look at oil prices, because we had seen some gains for oil prices earlier this week following the OPEC and non-OPEC meeting and a big drawdown in US oil inventories. But the reason why oil has reversed lower is because mainly due to a decline in share prices, global share prices, equity prices. This has created uncertainty about the global trade outlook as well as the global growth outlook, which could hurt demand for oil prices in the future. Saudi Arabia's energy minister did attempt to talk up prices. He did say that he does not rule out further cuts to production, but we are still seeing lingering oversupply concerns weighing on the market. WTI crude hit a 2-week low of $48.10 a barrel a short while ago, although Brent crude has seen much more limited losses. It's holding comfortably above $51 a barrel. And looking finally at today's economic calendar, we did have German and French final inflation figures, which were pretty much unrevised from the flash readings. The main focus will be US inflation data later, and we also have a couple of Fed speakers: Dallas Fed President Robert Kaplan and Minneapolis Fed President Neil Kashkari. They're due to speak later in the day. That's it from me. Thank you very much for watching, and have a great day.